What is a Series A funding of a startup venture? Well, funding rounds, as they're called, for startup ventures are generally designated by letter A, B, C, D. But before that, it begins with seed rounds. So your earliest stage of funding is your seed funding. And this can be funding from friends and family. It can be an early angel investor who doesn't put in a lot of money, but is, as the name implies, allows the business to get off the ground and start growing. The Series A funding round comes later. It follows the seed funding round and is normally at the very beginning of the growth path of the business. It's where the business has found substantial product market fit and is starting along that growth path where it's starting to accelerate, but it needs capital to do so. Normally this funding round is designated as a 12 to 24 month funding round, and then later would follow on by subsequent B, C, D, assuming that the business is going to continue to need funding throughout. So that's generally what investors are looking for. Most seed funding rounds are in the $100,000, $200,000, $300,000 range if it's by professionals or angel investors. Usually $100,000 or less if it's by the entrepreneur themselves. The Series A funding round usually starts off around $1 million and goes up to somewhere around $10 million. Anything more than that is rare. And during that phase, because it is still early on, there is substantial product market fit and it is entering the growth path, but usually you're still giving away a larger percentage of your interest in your ownership than most entrepreneurs are comfortable with or happy with. So a lot of negotiation goes on there about the amount of equity purchased. So that being said, it's usually somewhere between 10 and I've even seen as much as 50% ownership interest sold at a Series A equity offering. So generally this is what a Series A funding round is, the parameters of it, and the valuation and percentage at which investors come in.